Well, thank you, Mark. My selection this month is going to be a stock that I mentioned at the He Said, She Said session yesterday at the Great Lakes Regional Burke. We're going to be talking a little tiny bit about Waste Connections. It's listed on the New York Stock Exchange, ticker WCN, and here's a picture of their fleet. They have a huge fleet of waste collection trucks. And Mark, if you'll hit the next slide for me. Waste Connections is the third largest publicly traded solid waste company in the country. And Waste Connections has some very real strategies for growing its business and for maintaining its independence, and I'll speak about those just a little bit. Waste Connection chooses to focus on secondary markets. It does not want to play in the same sandbox as the two big players do. So Waste Connections chooses to go out and develop relationships in places where you will not find other waste collection agencies operating. It loves to be in exclusive markets, and it does everything it can to foster business in places where there is no competition, and then to keep that business running at so high a level of service that there's no need for competition or no way for competition to move in on what's going on. It is the industry leader as far as margin is concerned in this industry, and it also generates the most free cash flow as a percentage of any of the players in this solid waste disposal industry. Mark, next slide, please. Here's the location of Waste Connection, and you can see that it's focused in the Midwest and the far West. It just recently picked up a unit in Michigan, where I live. As a result of the merger of a couple of other companies, the U.S. Department of Labor asked the Republic waste people to divest of some of their holdings, and Waste Connection was able to sweep in and grab some of the markets where they're going to be the only player in the sandbox again. Notice a huge concentration in the Pacific Northwest, up in the Seattle, Portland area. Also a pretty nice distribution in California, and then back in the Midwest in lower Minnesota and South Dakota, the Nebraska area. Also, Waste Connections does a lot of work in Appalachia. So if you look there, you'll see in eastern Kentucky and eastern North Carolina, we have a lot of the Waste Connection services going on. Very interesting map, just to give you an idea of where the services are being generated. Next slide, please. Waste Connections is a $50 billion in revenue company, which makes it a pretty good-sized company. And in the sector that it operates in, about half of the sector is dominated by publicly traded companies. The remainder still is in private hands or is dominated by municipalities that run their own waste collection services. And about 40% of the business is concentrated in the two largest players. Waste Connections makes the point that solid waste is a commodity business. And no matter what you're doing, no matter how good you are at providing the services, the lowest price provider usually wins the contract. Basic levels of service are expected by customers, but the expectations are not nearly as high as they might be in some other industries. So once you win a contract, you tend to keep that contract for a significant period of time. Over on the right-hand side, you see some of the machinery that Waste Connections owns to manage the landfills that it owns. They have a 70% internalization rate, which means that 70% of the waste that they collect goes to their own landfills. That's a quite high percentage for the industry, and that gives them some significant scale opportunities where they don't have to pay anybody else to dump their waste that they collect. So it's a real plus for this particular company. At the bottom you see workers in one of their plants where they're doing significant recycling, and I'll speak about the recycling a little bit as we move to the next slide. Waste Connection specifically wishes to avoid urban markets. So when you look at those dots on that map, even though they might appear to be near some large cities, Waste Connection, part of their whole strategy in their business is to avoid large urban markets. So we're looking basically at centers that are out in the suburban areas or out in the rural areas. In any of the markets that it competes in, it wants to be at worst number 3, and it would prefer to be number 1 or number 2, and in fact in more than half of the markets where it competes, Waste Connection is number 1 in the market that it's dealing with. It also wishes to avoid collection-only positions in a competitive market unless the disposal is neutral. That's industry talk for we don't want to dump in somebody else's landfill unless everybody has to dump in that same landfill and nobody gets a financial advantage from it. They would rather dump in their own landfill and manage their own trash. They definitely don't want to be forced into a position of dumping into somebody else's landfill and giving a lot of the profit over to the other company. And finally, Waste Connection wishes to avoid competitor-controlled disposal of any type. They don't really want to be beholden to any of their competitors at any stage in the waste collection or disposal process. Mark, next slide, please. Waste Connection has some significant upside potentials. It is an acquirer, and it has no problems in acquiring small waste collection companies, again, usually in suburban or rural areas, and it does it on a fairly regular basis. As you read through its annual reports, you will find that acquisitions are occurring on a pretty regular basis, and the management team, which has been around for 20 plus years in most cases, has become quite adept at folding these acquisitions into the company without any major disruptions. Waste Connection indicates also that an improving economy increases the amount of waste that there is to dispose of. And so the potential upside for Waste Connection is the economy seemingly is improving, and that's good for waste companies of all kinds. Waste Connection thinks it's good for them also. The biggest driver right now of Waste Connection's profits, however, are the extremely high prices of recycled commodities throughout the world. A good example would be recycled corrugated cardboard. You'll find that recycled corrugated cardboard usually sells for $100 to $110 a ton, and right now it's selling in excess of $170 a ton, with almost all of this recycled material going to China. China is a huge importer of recycled materials, and of course then they're taking those recycled materials and creating more material from that material. But these high recycled commodity prices are a huge driver right now of Waste Connection's profits. Next slide, please. Here I'm showing the manifest screen from Waste Connections. I did cut off the CAPS information at the bottom. It was interesting that only two of the all-stars in the CAPS contest would consider Waste Connections a sell right now, with all of the other all-stars that have Waste Connections in their portfolio regarding it as a buy. Notice that it has a very high quality, 76.8, and that par is just 1/10 out of the sweet spot. The sweet spot this evening is at 12.5 and above, and I figured I could sneak in with 1/10 below at 12.4 and still be in a pretty good position. I do like to look at the 4 quality numbers when I'm looking at this screen. They're down there at the bottom of this metric, and I like to see all 4 of the numbers above the average value of 12.5, and that's what I'm seeing right here for Waste Connection. And what I've done is capture the bottom corner of the value line report. That's the numbers you see on the right there, where it says company's financial strength, stock price stability, and I guess I'm just pointing out the exceptionally high numbers in price stability, price growth persistence, and earnings predictability. These are exceptionally high numbers for any company, 295s and a 100, and I think that plays into this whole idea of high quality for this particular company. Next slide, please. Here's the graph. It looks a little bit stretched on my screen. I hope that the resolution is okay for you, but I hope that 5 or 6 of you that attended the conference this weekend are out there saying to yourself, up straight and parallel. I have put on the next 2 years of Yahoo forecast numbers from the analysts. So 2011 and 2012 have been added to these graphs. I'm noting that the sales forecasts seem to be relatively okay with my 11% that I'm forecasting going forward. I did use a preferred procedure, and I'm getting a forecast earnings that is in excess of that 11. I'm at around 15, and that appears to be a little bit conservative as far as the analysts are concerned. Especially on the second year there, you can see that my trend line is going through the very bottom of that earnings circle. I'm comfortable with that. Waste Connections is doing an awful lot of share buyback, and they've made some statements that they plan on giving a significant portion of their earnings per share back to the shareholder, both in the form of a dividend, which just began last year, and in the form of significant share buybacks. If you look at Value Line, for example, you'll notice that the shares predicted 5 years from now are down around 100,000, and that's a significant decrease from where they are right now. I'd urge you to take a look at the predictions for this company going forward. We might even have a real triple play on our hands right now. We've talked about these triple plays of Nicholson's before, and Waste Connection certainly has some of the metrics going for it at the present time. So without taking up any more of your time, Waste Connections is my choice. I've been having a little bit of trouble hitting even a single in the last 4 or 5 months, although last month's selection of ResMed is just barely beating the market. So let's see if I can do anybody by moving into some real garbage stocks, okay?
Could work. Could work to your benefit. Be patient. I think we've got a lot of time to wait for some of these. And now you've given me the assignment of sitting outside and waiting for the garbage truck in the morning so I can figure out who handles my garbage.
Okay.
Maybe I'll think about hoarding some cardboard. We do have a question from Christopher Hodgkins that beta.manifest.com doesn't seem to come up. Make sure you do beta.manifestinvesting.com. I'll go back and check that slide in case I got that wrong, but it's beta.manifestinvesting.com for the access to the beta. And Ken, you're getting a question, can we see the backside of the SSG? You up for that right now? Or you want to press on and maybe come back to it?
I think I have one more slide, don't I, Mark?
Let me see here. Oh, you do? I'm sorry.
Yeah, I do. And my one more slide, I didn't capture the entire backside, but I did show you some of the things that I think are important. I do like to check margins on a pretty regular basis, and I think the margins are moving in the right direction for this company. I think they've been amazingly consistent over the 10-year period, and they seem to be up versus the 5-year average at the present time. The return on equity is moving again in the right direction. There was some back and forth during the Great Recession with some competition, but I think it's headed back in the right direction again. There is a lot of debt to equity. There's no doubt about that. The company makes no bones about it. They are going to acquire. That's part of their business model. At the same time, they have enough free cash flow. It's the best free cash flow in the industry, and they can cover their interest payments 7 times. So that's a pretty decent cover for the interest that you're generating. So I'm not too concerned about the debt, although by standards that Better Investing sets, of course, that is a high debt, and it might make some people shy away from it a little bit. I thought that the PE values that were the average PE values at the bottoms of column D and E were pretty realistic, so I'm using about a 25 and a 18 PE to set my zoning. I'm getting about a 4-to-1 upside downside, and if you click one more time, Mark.
Yeah, I think we just proved we're both tired. Forgot these two were here.
Okay. If you click one more time, I think Mark is showing somewhere around a 12.1 par. My SSG is at 12.2. I usually find that my numbers are really different than Mark's, but somehow we seem to end up pretty close to each other in the par numbers down at the end right there. I tend to be more conservative in places where he's a little bit more aggressive and vice versa. But I'm pretty happy with that kind of a return from this size of a company. Again, they've just begun to pay a dividend, and they're committed to that dividend, to growing that dividend, and at the same time cutting back on the numbers of shares. So I would expect to see those yields rising in the future as they flesh that dividend out a little bit. Here's a beautiful picture. It's kind of a nice picture of garbage being rolled down a river right here on a barge, but that is garbage on its way to a landfill somewhere.
That's definitely putting some lipstick on it, I guess.
Okay.
Ken, we have a question from Roy Chastain that says, for the EPS, your 15% EPS growth rate is higher than that historical 11.4% trend. Can you talk to that for just a second? Don't you... He says, don't you criticize exceeding historical growth?
Remember that I make a lot of rules for beginners that I then turn around and break for myself. I'm very comfortable with my analysis that I did with my preferred procedure. I will tell you that it's not very often that I see companies that make the commitment to reduce the number of shares and then go ahead and do it in the way that Waste Connections is doing it. They've significantly reduced the number of shares, and they're committed to significantly reducing those shares again, and that's going to make an awful lot of difference in EPS growth going forward. So that I know the reason why I'm predicting higher. It has to do with the fact that the number of shares is going to decrease. I don't think that's going to happen forever, but I do think that that's going to be a significant driver in the next 2, 3, maybe even 4 years. So I'm going to stick with my number at the present time, even though it's something that I would never advise a beginner to do.
Cool. Yeah, and if they maintain their profitability, that obviously gets much easier. Ken, you must have mentioned triple play in your remarks. We have a question from Ken McNeely, and don't worry about the time. Without Hugh's input tonight, we'll probably have a little bit of extra time. So could you spend a moment defining a triple play?
Well, Mark, I hope you're going to jump in because I didn't prepare this, so I'm going to hope I can remember the things that I'm looking for. I do know that in a triple play I'm looking for PE expansion. I'm looking for the PE to grow within the next 5 years. I'm also looking for net margin growth in the next 5 years. And Mark, for the life of me, I can't come up with the third thing I'm looking at in a triple play. Can you help me?
the last missing link in the triple play is to find a stock that has been beaten down in price so that your return forecast is unusually high. So those three elements are what we defined as a triple play, and certainly the type of companies that you want to look for.
Right, absolutely. And Waste Connections came to the top of a screen for me. I do a lot of screening, and of course I use Manifest Investing for a lot of my screening. But I haven't seen Waste Connections on a screen probably in 3, 4, 5 years. And when a company suddenly pops onto a screen that I'm familiar with because of its up, straight, and parallel characteristics, I'm always very, very interested. That always means there's been a little bit of damage done in some way, shape, or form, and the price has taken a dive, or maybe it's just not caught up with itself as far as profitability is concerned. But I do think there's significant possibilities, good possibilities, of PE expansion and net margin expansion for this company. Value Line tends to agree with what I'm saying right now, although I don't use them as gospel, but I do like to see that they're saying the same thing I'm saying. That means they must be right for a change. That was a joke, by the way.
I got you. I got you.
Okay.